Good record keeping. Before we go to good record keeping, which is a hugely important topic, let me pause a little bit and talk about the question that I was asked during the break. How do I scan for stocks? I have two ways of looking for stocks. One is lazy and the other is hardworking. Which one do you prefer? Lazy. Lazy. Me too. Lazy way is this. I go to spiketrade.com, log in, and we have these elite level traders, we call them spikers. We have 13 spikers now, and they submitted these picks. Now these guys are competing for cash because they get bonuses. People who are positive at the end of the quarter get bonuses, and for glory. And I think they value glory a lot more than cash. So we have these spikers, and these are their picks. So I click on direction, I click on sort, and so now I have all the longs on top, and I have all the shorts at the bottom. I go to Spike Trade, I open this special layout that I have, and so I'm bearish. So I'm looking at spikers who submitted short picks. These are smart guys who are really who doing their research and who are trading to win. So we have 4 short picks. Jim, who is one of our oldest members, he is about 80 and very, very savvy guy. He is shorting PPC. I don't think so. Impulse system is green on the weekly. Impulse system is green on the daily. There is no trace of a divergence. How to short that? Scratch me out. And Vladimir is shorting TDC. I don't see it as a short. I see it as a buy more than anything else. I'm not looking for complicated trades. I'm looking for easy money. I'm not looking for a challenge. I'm looking for something that will grab me by the face. So let's see, Sid, who is a very careful guy, is shorting SPY. Let's take a look, SPY. I can go back to Spike Trade and see what is Sid saying about SPY. SPY stopped me out last week, owes him money. This still looks stoppy, and QQQ is trying to hold below. IWM is also diverging. Daily is creating divergence on a MACD histogram. Also a lot of reversal and dodgy days. It's tricky. I feel this could be another whipsaw week, and small movement up and down can stop you out. I'm going to look out for 78-minute chart to enter the trade. This is where I look for my trades. This is option A. You know, I look at all these smart people making their picks, and I follow them. And Sid wrote a very sensible thing, how he is bearish, but he got stopped out last week. It could be another week like that. He is cautious. He is not jumping in. Let me show you a more hard-working way of looking at those things. I do a scan of potential and actual MACD divergences in all S&P 500 stocks. How do I do it? Most people try to write a divergence scan, which I don't think can be written. And a divergence scan, well, here you see red dots popping up. What does it mean? You have a peak of MACD histogram, a break, and now MACD is coming positive again. Prices are challenging the old peak. Red dot, you see? And it's not really a divergence yet, it's a potential divergence. And so I get a list of potential divergences, and then I eyeball them to see which of those things I'm going to trade. And it worked out quite nicely. So I did the scan yesterday. I found that among 500 S&P stocks, there were 6 bullish signals and 58 bearish signals. I think there's a message somewhere there. And then I eyeball them to see which ones I like. So I found one bullish chart that looked interesting. FLR doesn't look bad at all. A downtrend, break below lower channel line, pull back to value, a break to a lower low. So all stops get wiped out, and the stock closed actually higher for the week. Am I going to go and buy it? Nah, I'd rather be shorting here. But it is a legitimate buy. I think it will become a legitimate buy if it trades above 62.35. It went out at 62.39 on Friday, so it's just about there. Look at the daily chart. So no diversions, no nothing. But in any case, that was a weekly pick. Let's take a look at the bearish signals. How about this one? SO. I think looks interesting. Take a look. We have a false upside breakout. The impulse system turned blue. MACD histogram sliding. Force indexes diverging. I mean, I look at something like this and say, hey, this is something. Let me work it up. I go to the daily chart. Is this a thing of beauty or it is a thing of beauty? We had, on Monday, it broke out to a new high. It traced a beautiful bearish divergence on the daily charts. Right? So now we decide if we sell it short, three numbers, entry, target, stop. I mean, this is like a trinity, right? Without it, you cannot go anywhere. Entry, target, stop. The distance from your entry to your stop, the amount of capital you're planning to risk, the average true range, and get ready. How about this one, ETR? It broke out to a new high and is not having a huge amount of progress, does it? And actually, on Friday, it completed a false upside breakout, by closing below support. There is a bearish divergence on the weekly chart, and there is a very nasty looking daily chart as well. You see this one-day rally. This is where stops got run, and it's sinking now. I mean, it takes me an hour maybe to do this kind of thing, and you find 5-6 stocks that look very interesting. Now you start working them up. Just keep in mind, this is not an automatic trading system. Basically, you dig up, it's like digging up iron ore from the ground. It's enriched iron ore, but it still requires processing. Let's take this couple of tickers we discussed, and let's do real homework. Daily homework spreadsheet. I call it trade scan. It's 12/7 today, right? And we found these stocks, SO and ETR. So we're thinking of shorting, right? So now we need to work up these stocks. So item number one, someone asked me earlier this morning, do I watch the news? And I said, the one piece of news I'm always on top of is earnings, because I don't want to run into an earnings report. So I click, and I have a link there, which says FinViz, which is a wonderful research website. I click SO. Earnings were October 29th, so no worries about earnings. So 10/29, we're in good shape. And ETR, earnings November 4th, again, we're in good shape. So the next item I want to check is what is the short interest in a stock. In futures, the sheer number of long and short contracts is always equal. Exact. But not so in stocks. In stocks, you have very few shorts. But occasionally, you have a stock which has a very large short interest. And it's very good if you buy. If stock starts rallying, those shorts will run. And as they cover, the stock can go vertical. So if you're buying and a stock has a large short interest, it's a good thing. It's like an extra fillip there. If you're shorting and the stock has a very large short interest, then you're joining the crowd. Let's not. So let's check what the short. By the way, last week you can see here, I had 3 candidates. I showed you one of them, DDD. The impulse system stayed red, but short interest in DDD was 35%, which is enormous, enormous short interest. So for a buyer, it's a very good thing. For a short seller, I wouldn't touch it with a 10-foot pole. Another stock I was considering last week was Tesla short, and short interest in Tesla was 23%. I would not sell short a stock with that high short interest. Once it goes into the teens, count me out. Days to cover, again, there is a free website, shortsqueeze.com, and SO, shorts as a percent of float, is 4%. Days to cover is 6. This site, shortsqueeze.com, it says short percent of float, meaning, okay? So short percent of float below 10 is normal. Low single digits is even more normal. Above 10, alert, into the teens, I would already be reluctant to sell it short. And another thing, this is somewhat artificial number, days to cover. If all volume was dedicated to covering shorts, how many days it would need? 6 days. Let's do the same query on ETR. Short percent of float, 4.98%, 5%. Days to cover, 4 days, 3.8 days. No problem, no objections. Well, let's do SO. Next, I look at this thing. The question, my spreadsheet asks, at what level will impulse system go blue? It's already blue on the weeklies. At what level will it go blue on the dailies? It's already blue on the dailies. Right? So I have no problems at either one. Blue, blue. And next it asks me, what is the 1 ATR in SO? So SO 45.27, 45.93. So 1 ATR is about 65 cents. It's 65 cents. And now it asks me, what's your entry price? The moving average is at 47.47. I would say, yeah, somewhere there, 47.47. Well, 47.49. I want to sell a little bit above value. I will sell it short, 47.49. What's your target? I would say this orange line around 45 is a reasonable target. On the weekly, targets on weekly, stops on daily. Stops on dailies. What's your stop? Well, this high was 48.31. That's where stops get blown out. I'm not going there. 48.31. This one, 48.17. 48.14. 48.13. I would say 48.16. How am I doing with ATRs? So my stop is about 65 cents away, is it? I'm shorting at 47.49, protecting at 48.16. So this high was 48.31. I will say 48.39. I'm trying to put my stop off of some kind of chart pattern. So I'm going a little bit above this one. I come back to it. How much am I going to risk? Now, I will risk anywhere from $200 to $2,000 per trade, depending on whether I'm really doing it a serious trade or a play trade. Let's say it's a play trade. So I'm going to allow myself $200 risk. How many shares may I sell short? The formula calculated my risk. I'm risking from 47.49 to 48.39. 222 shares, 200 shares. Now, what happens time and again, I will work up a stock like that, and in the end I'll say, makes no sense. The stop is too far, the target is too close. And so I will be plowing and plowing and plowing and discarding 4 out of 5 stocks until I finally say, this is the one. And this is professional trading for you. Plowing and discarding, plowing and discarding. It's not just, oh, okay, SO looks good. Oh, sure it looks good. Everybody agrees it looks good. Do the numbers line up? It's boring work. I don't enjoy doing it, and I do it. You have one more self-test there with questions, 5 lines of questions. Think about tomorrow, and if it was the morning, fill out the boxes and rate your readiness to trade. Start using it and start changing it, but the whole point is 5 questions, and in a moment you know, should you be trading today or not? Let's talk about good record keeping. I wrote this book back in 2006, I think, a book of interviews with traders. I finished this book and went around talking to people about it. Many of them said, what do these traders have in common? They are men and women, Americans and foreigners, people who trade stocks, options, futures, people who trade very short term and very long term. One thing they have in common, they all had in common, they had excellent records. Just really excellent records. Show me a trader with good records and I'll show you a good trader. I keep my records in a trade journal, which we have at spiketrade.com. Take a look at the questions. Entry, target, stop. How much will you risk per trade? What is the name of your trade? Each trade has to have a name. Call it a system. Call it a strategy. Each trade has to have a name. So these are my trades. False breakout with the diversions, pull back to value, fading an extreme, trading against an extreme, and fundamental. And that's all I have, 4 strategies. So if you tell me, hey, take a look at such and such stock, and it looks attractive to me and I want to trade it, it has to fit one of those 4 strategies. If it doesn't fit it, there is no trade. Each trade has to have a name. Here in the trade journal, it enables me to attach my charts, and then when I exit a trade, I have to classify every exit. Every exit deserves a name. Hit target, hit stop, hit value, hit envelope, trade going nowhere, started turning, couldn't stand the pain. How about that? Couldn't stand the pain. Anybody heard of using stops? Obviously not the person who couldn't stand the pain. Junk trade, have no business being in it. Okay? And now I can pull up my equity curve for all of those trades. What do you think is the difference between my equity curve for hit target and couldn't stand the pain? Okay? But this is how you learn, by keeping records on yourself. Daily homework, just as I do that psychological self-test in the beginning of the day, I do this. So tomorrow morning, before the market opens, I'll click on this link, check Far East markets, and I'll switch from the US to Asia. Why? Because markets go around the globe, Asia, Europe, US, Asia, Europe, US, like a dog chasing its tail. US, of course, is the most important, but it goes in a circle. So I'll look tomorrow morning and I'll see how's Nikkei doing, how Hang Seng doing, how's Shanghai doing. And then I'll go to the spreadsheet and I will write, like I wrote on Friday, up 0.2 to 1.3%. So Asia was strong coming into Friday morning. Next line, how's Europe doing? And I will look at only at FTSE and the DAX. So again, on Friday coming in, both FTSE and the DAX were strong. No surprise that the US market went up. You could see this wave floating around the globe. Asia went up, Europe went up, now we're opening. Chances are very high that this will continue. Economic calendar. But look, for example, on Monday there were no great news. Thursday, jobless claims, retail sales. On Friday, producer price index. You know that those big numbers are coming. They usually come before the markets open. You want to watch how the market reacts to those numbers, how it trades before and after. Market Watch. Market Watch is the most popular website for the trading public. So I want to see what the trading public is being fed today. Check prices of euro, yen, oil, gold, bonds. By now you're starting to get in gear with what's happening in the market. Baltic Dry Index has nothing to do with the Baltic Sea, but has with the price of moving cargo across the ocean, and one considered to be the most sensitive leading indicator of world economy. New high, new low, VIX, S&P. What is S&P related relative to cash? My expectations of the S&P candle. I don't always have an expectation, but when I have, the next day I go back and I color it green if my call was right, or red if it was wrong. And this is my morning homework. A hugely important thing, become your own teacher. When you keep a trading diary, keep your trading records, 2 months after you exited the trade, pull up its chart and mark up what he did right and what he did wrong.